Hello, hello, this is your boy 1 out of 20%, and we're here again for another market recap. So, guys, I'm here again. I haven't been training for a couple of days now, but yes, for the last 2.5 weeks, it's been slightly aggressive for me because I've been conceding a lot of drawdown more than usual, which is okay because happens. But as well as it's like if you want to compound our account and make some money past challenges and get funded and stuff like that, we need to make positive trades. It happens to me. There was a couple of weeks where I was bagging, like having a lot of winning trades one after another, big amounts of profit. But for the last 2.5 weeks, not every single day, because the days they were positive, they were, I would consider them as a break-even days, because they couldn't clear the few times that I lost. The few times that I lost, they couldn't be covered with those wins. But yes, so ever since Donald Trump took over the market on gold, because I'm trading mainly gold lately, it's been slightly good, but at the same time, uh, it's been moving too much. Like, and for the strategy that I normally like to use, sometimes having the market moving is good, but is unpredictable as well. But that's another thing to discuss another day. So, as you can see, the market, it's been trading around this CVA, this area, this composite value area, where most of the transactions have been happening. So the market is been trading around here lately, and I think that made it's actually good because the market is not moving a lot. Is not moving a lot from our CVA. But okay, so as you can see, like I was saying before, this more is the market structure since last Thursday, when the market broke the 27.99. So the market was driven all the way to these prices between 28.29 and 28.56, which is actually good. The market has been moving very aggressively towards upside, and then was slightly rotational within the CVA, but I would say like going from one end to another end. Basically, this is what the market has been doing lately. So it's moving, and this is what it's supposed to do. So this is what we should make our profits in. Yeah. So the market is moving slightly a bit, but it's okay. Yesterday was a very good day of trading for those who actually trade, because as you can see, the market was being driven from 27.99 almost all the way to the other side of the CVA, broke the CVA, and even start trading above the 28.56 up to 28.71. So yesterday was a big day of trading for those who actually enter on this trade. So today, there is a couple of things that I would like to highlight about the today's trading, because I don't want to blame the market for it. I would blame myself for l- sometimes not following my strategy in a way, but as well as because I follow my strategy too much. I don't believe it's a strategy, it's just like the way I trade, basically. I wouldn't put the word strategy on it, but sometimes I believe it's very important to improvise while you're trading. So let's start with it. So the market last night closed below the 28.56. So the market closed below. So I set up this as my LIS because I was expecting the market to be driven probably within this CVA in a rotational, or probably just break and trying to achieve previous points, such as this one over here at 28.2, 28.02. Probably these prices, I was expecting the market to probably go there, or actually just trying to go a little bit lower. But It didn't happen, which is okay. But then this is what I say about improvise sometimes. As we can see, the market was trading below the 28.56. I've made a couple of videos about rotational days and how to about the rhythm of the market, trying to understand the rhythm of the market. And I actually failed with these for the last couple of trading days, because the last few times when I trade, I always misunderstood the rhythm of the market, I guess. Because imagine the market was trading below the VWAP, which is good, an indication that we should sell. The market was sold, as we can see, and stop here, stop around here. Okay, stopped. The buyers, they tried to bring the market back up, but they failed. And the rotation was in between the VWAP and the fast trend, as you can see. At some point, the market stopped and couldn't go any further. Usually, what I'm expecting sometimes is, if the market is trading below, the attempt of the buyers is to bring the market back up and then fail and carry on. Um, this was my expectation, but it didn't happen according with my expectation, which is completely fine. But then this is another part that I mentioned about stick too much with your strategy or with your analysis. So my bias was to sell, but the market had the reversal, and and because of this reversal, I should be able to understand the rhythm. I saw that the rhythm changed. There was no more attempt to taking the market back down, and the buyers, they broke the VWAP and they start trading above, and I just should follow. I'm not very fan of listening what some people say, which is like, oh, you need to trade the trend. It's not always trade the trend. It's analyzing the rhythm of the market. Sometimes the rhythm change a little bit, go up a little bit, and then goes down. And basically, I failed to read the rhythm of the market. So let me start showing the order fields. And as you can see, I took a little short just to test the market. See, the market didn't go any further, so I decided to flat my position. I could attempt another short and I was done for the day probably. So as the market changed, I saw a little bit of inconsistency of the buyers, because the market went up and suddenly went down and then up and down a little bit, so there was a little bit of fighting. But one of the things that I failed to understand is the market already broke the VWAP. The average price has been exceeded, so now they probably will try to go back to the previous prices, the higher prices, like this one over here, and this is what they did. So I failed, and as soon as I saw the market going up, I flattened my position. Fine. I followed the continuation. I saw the market breaking the 28.58, and I took a few longs. Took one long in here, another long with a few amount of contracts, probably 4 or 5 contracts, and yeah, I was positive until here. And then I said, okay, the market is just pulling back, because I set up two levels, by the way. This one over here, which is the 28.64, and also the 28.71. So if the market was going up, I was expecting to go to this level and this level. But what I noticed is, while I was on the market failed to go to the second level over here, which was the 28.71. And as the market failed to go to that price, I was convinced that probably the market would do a nice pullback, and then I could take some shorts. So I anticipated my entry, which was not bad. I should anticipate it from here, and I would just take another A plus trade, but I didn't. So I let the market be driven a little bit, see what it could happen. I was expecting to break this level over here. It broke and start going down, and I should have start trading from here, like from the moment that this level was broken, take a short, and actually did make a little bit of profit. I saw the market giving a little bit of continuation, and I apply another short, and this is when this is one of the other things that I said about sometimes improvise and understand the rhythm of the market and what's going on in our surroundings. So for the last couple of weeks, when I lose trades, most of the times is because of this little impulse. When the market is going in one direction and there is a little impulse simulating a continuation of the movement. So even though I took my short where I took my profit, the market went down a little bit, but the thing is, it didn't go to my target point. I wanted to make a certain amount of money, and I put my target upon that amount. But unfortunately, the market failed to continue to do the continuation of the movement, and I got stopped out. And this is how I start having a little bit of drawdown. So I wanted to make sure the market would go to my stop loss, which was a little bit above here, and it didn't go. So while the market was being driven all the way up, I put another short positions, and the market just went up, went up, and was being driven. I was in a huge drawdown, but then I start seeing a little bit of rotation. This is another thing that I would like to suggest as well people to be aware of, is about the rotation. Sometimes they can be good, but at the same time they can be bad. For me it was good because I anticipated, like, the buyers, they were trying to touch this point over here. They actually did, they broke, but then they never touch my stop loss. And this is one of the principles that I have. If the market didn't touch my stop loss, I'll carry on being on the market until the market said so. So the buyers, they failed to rotate all the way up, and I start putting one short. Start the rotation continue, the balance continue, and then what happened? I should have taken another shot here and another shot over here. I wanted to, but because I had already a big drawdown, I didn't want to take the risk of taking so many contracts and then end up break even, or just the market turns against me and then I'm losing all. So I decided to be more careful. I scale in a little bit just to avoid to have a big drawdown. The market actually went up, but I left the market too a little bit too early, I guess, because if I should have waited until here, and then I would have my first position in break even, and any other position would have a little bit of profit. So I failed. No, I actually flattened my position a little bit early, but it's okay. And then there was the continuation. I saw the continuation, and I thought the market would actually be driven all the way down, because depending of how you analyze the market, I use the trend line for that. Sometimes it's just to double check the rhythm, and if you see the market fail twice on the same spot, so the same way the market failed around here twice to continue the rotation, the market as well as failed twice. So the market went to the previous point, the point of the previous day, and failed. So I assumed the market was carry on going down and probably break this zone, or just attempt to go around this zone over here, the previous low around here. I was expecting the market, a little bit of expectation, which is not bad, but everything could happen. So I took a shot over here. No, two short positions here, another shot over here, and the market actually went down. I was in profit, but once again, I didn't go to the place where I wanted to be. So I had a specific target, didn't go there, and the consequence of didn't take the trade earlier was this. So I let the market be driven to my stop loss, as I did before. And yes, so I considered a little drawdown for the day today, which is okay. Don't like to lose, but we don't win all the times. And yes, so I had a little drawdown of 1,147 on my account today. But yeah, this is something that can be manageable. Let's try to improve the trade, as well as pay attention to these small indications, be more patient in terms of entry and exits, because sometimes doesn't matter the way that you enter, but the way you exit can tell it all. And so I learned this again today. I enter a little bit bad, I had chance to exit a little bit better, but well, it didn't go too well. Same thing over here. I entered a little bit bad, had chance to exit a little bit better, but I didn't complete. So this was the recap for the day. It wasn't a positive day, unfortunately, but yes, guys, I appreciate your time. I hope you guys enjoy this market recap. Take your time, do your trade. Today the gold market is about to come to an end, so probably tomorrow. But yes, if you have any questions, comment on the section below. If you need to know where I get my tools, on the section below we'll have a few information on where you can get the same tools that I use if you're interested to. But yes, so thank you for watching. Have a good evening. Bye.